Okay.
Okay, and everybody, it's time for our Mortgage Minute with Tatiana.
Hey, Tatiana.
Hi, guys.
How are you doing?
How was your week?
Well, we can answer that better when we know what you're about to share with us about the interest rate.
All right. So actually, the rate, went down a little bit
Yeah.
comparing to the week before. They were kind of like all over the place. Rates on 30-year fixed and 15-year fixed and jumbo, they decreased. But on ARMs, they went up. ARMs are not super popular right now anyways, but on jumbos, they are more attractive than on conforming loan limits. And conforming, just to remind, is below 1.149825.
And that's in
That's
our area specifically,
Yeah.
right?
Right, for metropolitan, DC metropolitan area specifically.
Okay.
Okay.
So they're expecting another Fed announcement on June 12th. Let's see what happens then. But they think that they're probably going to be just one cut this year.
Okay. Now,
Those-
didn't Europe just make their first cut for the year?
Exactly, yes.
Right.
They
So that
did.
could be, I don't know if we follow Europe or not, but that could be a hopeful thing.
Well, yeah, we'll see. I'm sure there's some sort of influence, but yeah, they did cut the rates.
Okay.
Yeah. So right
Okay.
now, 7.03 on 30-year fixed, 6.5 on 15, 7.3 on jumbo being higher, having higher rates still. Historically, jumbos actually were lower, but in the past a few months, jumbos are higher. And FHA, VA, they are around 6.5.
Okay.
Yeah.
Very good.
That's actually better news than I expected.
Is it?
Mhm.
Yeah.
Yeah.
Okay.
Yeah.
I already know.
Good job,
I
Tatiana.
already-
Good job.
Thank you. I did everything I could to lower them.
You did. You've been working so hard this week. You did a
Whatever you
great
did,
job.
it worked. All right. Okay. So on to our question of the week. We are always talking about DTI,
Yeah.
or debt to income ratio, but we've never taken a deep dive into that. So teach us, what is it? How does it work? Why is it important? Like, give us all the info.
All right, let's do it. Debt to income ratio, or DTI. It's very important when we calculate how much person qualifies for.
Okay.
So basically, it's a percentage of monthly debt comparing to monthly income, simply put, right? So every loan, every type of loan has the guidelines on the maximum debt to income ratio. It cannot exceed certain percentage. And sometimes if it goes higher by 0.01% of the maximum limit, the loan is going to be ineligible. So we do look at DTI very closely when we approve someone. So let's say the situation, the example, so conventional loans.
Can I ask a question?
Yes.
Okay, because this is a perspective I would have a question on. So I want to be able to make sure it's clear. So we're talking about monthly income versus monthly payment on the debt. We're not talking about gross debt, correct? Like, we're not talking about I've got $35,000 in credit card debt. We're talking about I've got $350 in credit card payments. Is that right?
Exactly.
Okay.
So it's a monthly, it's not the balance. We don't look at the balances.
Okay.
We look at monthly payments.
Okay.
And that's what we compare to the income.
Okay.
So on conventional loans, maximum debt to income ratio is 50%.
Okay.
So let's just have an example. It's going to be easy like this. So let's say the income is $10,000 a month. And we look at, if someone is on W-2 income, we look at the gross income before all tax, retirement deductions, what have you. So 10,000 gross income. And that means that this person can have maximum of monthly debt of $5,000 because that's
Okay.
50% of the gross income, right?
Okay.
So then we're gonna look at their monthly expenses, like minimum required payments on credit cards. And I always stress out on minimum required payments on credit cards because a lot of people maybe pay all the credit cards balances completely. We don't look at that number. We look at what credit card asks them to pay. We look at car loan payments, student loans payments, whatever they might have. We don't look at utilities. We don't look at car insurance or gym memberships. We don't look at stuff like that. We'll look at whatever comes up on the credit report.
Okay.
For VA clients, we actually look at child care expenses. If they have children and they go to daycare, we actually factor it into this DTI calculations. But on conventional loans, just whatever comes up on the credit report. So
Does
let's say,
does alimony count as income?
so the alimony, if someone receives the alimony, we can count that as
Okay.
income or child support. If somebody pays alimony or child support, that's gonna be an expense.
Okay.
So let's say in this particular situation, example, a person has $1,000 monthly obligation. So we're
Okay.
gonna subtract it from that $5,000 maximum possible. And that leaves us with a remaining of $4,000 that's gonna be the mortgage payment.
Okay.
Kind of going backwards, right? So
Okay.
that's this person will qualify for $4,000 monthly payment. What does it translate to in sales price? That's gonna depend on their down payment because we need to know how much person is gonna put down. I can tell them what loan amount they qualify for, but again, depends on the down payment. The interest rate might be different. They might have some additional monthly charges like a mortgage insurance. That's why when I qualify someone, I need to know what their income is, the expenses are, and how much they're planning to put down. Without those three factors, it's going to be really hard for me to tell what they qualify for.
You got to know what ingredients are in their pantry before you can say, this is the meal you can make with it.
Yeah, and what type of property. So if they have $1,000 condo association fee, because they want to buy a condo, that lowers their mortgage qualification to $3,000 at that point.
Exactly. And that's another thing we ask, what type of property you would like to buy. Some people look at condos or townhouses, they're in between. So then I would tell them, if it's a townhouse, you're probably gonna have HOA dues of $100. This is your maximum for townhouses. If it's a condo and the condo dues are $800 a month, that's gonna be completely different price.
You know, and this is a really important factor because we just had a client that we're mutually working with right now, and they had a pre-approval letter from a lender that was a large VA lender, but is not a local lender, and their numbers are based on honestly their credit report and stated income and assets. That's it. They haven't looked at these things. So we don't know the validity of that letter. That's why we send them to you, because we need to know, because you'll pull the assets, you'll pull the expenses, you'll pull the, the income. So you know what that DTI is, what they can actually qualify for, because that DTI is that critical point.
And that's the other reason we have to have clients working with a lender that we can get in touch with, right? So that we can say, hey, how are we on a condo that, like, maybe you've pre-qualified them for this amount and they were looking at townhomes and suddenly they want to look at a condo. Hey, how are we with a condo at this price? And here's this is the condo dues, and you can say yeah or no. That's such a huge thing because so many people without lenders at all, or ones that we can get in touch with, we'll show them 5 properties in a certain price range just to find out later on down the line that, oh, we've got to lower the budget by $100,000.
Yeah.
You know?
And I think
Yeah.
the relationship between lender and the realtor is very important, because like you mentioned, someone out of state and they don't really know you, they don't care to know you, they
Yeah.
don't think about things like that, they gave you one budget and you're gonna spend time, gas,
Yeah.
money showing them properties,
Yeah.
and then they're gonna say, oh, oopsie, you know, this is wrong price
Yeah.
range.
And wasting the client's time, you know, I mean, they
And
end up they get devastated when they're used to looking here and then suddenly they have to look here, then they end up oftentimes having to take a couple of weeks off to lick their wounds from realizing that they can't have these things, you know, and I just think that that's not fair. That's not right.
Right.
Yeah, but you're right, Tatiana, you're right.
All right, Tatiana, how do people get in touch with you in case they need to find something out?
They can call me anytime at 571-245-3000.
All right, very good.
Thank you.
Yeah, thank you. Have a great week, and we'll see you on next week's video.
Okay,
Bye.
see you soon. Bye.